Morning traders, Brian here with a video on my stochastic template that I'm using to scalp the NASDAQ futures market with on an intraday basis. Some of you requested a video so that I can explain better how I'm using that, and that's what this video is. So hopefully you'll find some value in this, and maybe there's an idea or two you can take away and employ in your own trading. So I don't have a PDF attached with this. I'm just going to talk you through the different aspects of this template and how I incorporate the higher time frame to filter some of the trades and some of the things that I'm doing that so far this week I've been trading it in a sim account, just getting accustomed to it. It's been really good. So anyway, let's go ahead and get started. First thing I'm going to do is just pull apart our higher time frame. So let me go over here. I'm going to expand this chart. You can see what I've done here is I've compressed the time, because all I really want to see is the wicks. Once we get into a trend, I'm looking for these wicks. I'm looking for price to get above these lines here. But I'm going to go into that in a little more detail. So let's explain what's on the chart. First of all, this is a 75-2 Ninza bar with nothing more than the black flag indicator on it. Let's open it up and show you. That's it right there. Here are the settings, 28 and 1.9. You can set this ATR factor to whatever you desire. I encourage you to take a look at it and see what you like and how it fits in your trading plan. So what I was looking for was a way to measure pullbacks on a higher time frame so that I could try and exploit those on the lower time frame. But anyway, these are my settings. The bar status by Ninza is simply these. For those of you that may be new watching this the first time, just shows me where the bar, when it closes, it's either going to close, when this current bar closes, it's either going to close here or here. And that's important for an aspect of this that I'm going to show you a little bit later on. Alright, that's all I have. There's no template here. It's just you download the black flag indicator from my Discord room or wherever you want to get it from, and then set it up ever how you want to. Again, 75.2. But to use this higher time frame in one of the ways I'm using it, you'll need the bar status also by Ninza. And it's a free indicator. All these are free. Okay, so that's pretty much it. This indicator, the yellow highlights, is part of the black flag. It just shows you when it's in bull mode, when it's in bear mode. That's all it does. So, and then it creates these nice little bands for you. Catches price, alerts us. All right, so that's a description of the higher time frame. Now I'll spend a little more time and get into the lower time frame, my entry chart. Right, this is an 18.3 Ninza bar setting. This has the features on this is it has semi-automated or automated markers entries modules. Now you do not need markers to trade this strategy here. If you're competent trading the NASDAQ in a manual mode, you just need to understand how this stochastic trend model works. Alright, so we're going to get into that. So anyway, these are two features that are part of the markers template that I've created for this. Those are the entry modules. Now, other features are based, the squares, black and yellow, the arrows, yellow and find a black. Those features are all based on what the stochastic is doing down here in this pane. So this is a simple stochastic set at 14, 28, and 3. Now this isn't the stochastic indicator here. This is just my copied version in markers that I'm using. And what I've done is I've set the upper and lower boundaries on this to 60 and 40. And again, you can change these once you understand the concept. You can change these thresholds to whatever you desire once you understand how I'm using it. All right, so let's talk about one aspect of the stochastics and what it's doing up here on the chart. The first one is a bearish crossover. We can see the blue line is the %D and the white dash line is the %K. So when the D crosses below 40, paints the bars red. When there's a pullback, I have my bar settings on my template to silver, because all I want to know is in a bearish mode, I want this to trigger, and in a pullback it's going to stay silver as long as it doesn't cross above the 60. So anytime that happens, you're clear to take what I call just normal what I call the B4 jiggle trade. That's what these look like if you're using the B4 jiggle. So you see no blue, and so you're clear to take the trade. I'm going to talk about the entry modules here in just a little bit, but right now we're just talking about what this %D is doing down here. So it's once the close is lower than the open, it's going to paint the bars red again. So that's all this is. %D is less than 40, and the close is less than the open. And bam, bam, bam. All right, here's one that gets back above, so no trade there. We get red, we're back below, recovery, lower high, and so you're looking to take the trade there. All right, should all make sense. Now these, let me change this so it highlights those. So this is just a normal swing indicator that I have on here to help guide you. It's set to 5. I'll break this out in just a second here. Swing indicator just gives you a quick visual on where the higher lows, lower highs are. But also I like these trades here where price comes down. If you miss this entry, it comes down, it hits, goes down, and then we get the John Wick. I love those trades right there on those when it tests that swing either low or high. All right, so that's the %D, and let's look at the bullish case on this. Let's show some here with, so here's a real choppy bullish thing. So we get %D above 60, turns blue, pull back, see no red, blue again. It's just chopping you up right here, but the trend is still up because you see no red. Finally, you get these series of higher lows, and you get a little bit of a movement there. Here's a nice uptrend. You can see the logic behind this, and I'll talk about the entry modules in a bit, but you can see there was never any red in this uptrend here. It's just continually making higher lows, and you're continually getting entries. And one final before you got the lower high. All right, that's an explanation of the %D. Now let's talk about the %K, which is the white line. So this is the gauge here. You'll notice all it does is it identifies pullbacks when the %D is trending, and it's highlighted by silver bars inside the trend. That's all it is. Now I don't have a code for that. My code is when %D is greater than 60 and the close is greater than the open, the bars are blue. It just so happens when the bars are down, %K is going to go back below in the bull trend, back below %D. Okay, that's all it is. No magic there. It just captures that perfectly. It works the same on the bearish. As soon as you get the up close, %K is going to go above the %D. You close back down, and then you get the downward slope, and eventually it will cross back below. All right, so that's the stochastics. That's how I'm using the trend model version of this. Now you'll notice that there are black squares and yellow squares. What these represent, we already know that the color bars represent %D above 60 and below 40. But the black squares and the yellow squares represent %K above 60 and %K below 40. So you'll get those triggers. I'm using that as an entry module, the %K Momo entry module. And I'll explain later how I'm actually using that. You'll also see the arrows. I have those set to a 2-close entry module. So if you're in a bullish trend, here's one that didn't work, and here's a couple that did. Actually, it never fired here, so you would not have gotten in there. Yeah, because I'm requiring, on the entry module, I'm also requiring in a bullish mode, 2 down closes prior to the 2 up closes, 2 and 2, 2 by 2. So that's why you would have escaped a loss on that one. So, but anyway, we're bullish. We got blue. We come down. We get two up closes. So you would have gotten in markers. I've got mine just set for market entries. You can play with that if you have markers and set it for limits, which is probably what I should do, because 85–90% of the time, every time I get in, it always goes against me. So I should just go ahead and set those up for limit orders. But anyway, that's a little bit later on. All right, so 2 closes up. We're still bullish. No red down here. More blue. Comes back. 2 down closes, 2 up closes. You're in for that. Come down here. We get red. 2 down closes prior to. 2 up closes prior to 2 down closes, and you get the yellow arrow. And there you go. Blue, 2 down closes prior to the 2 up closes, and you're in for that. 2 up closes prior to the 2 down closes, and you're in for that. So that's how the arrows, that's how the squares work, and that's how I'm using the stochastics indicator for this. And again, the swing indicator is just a barometer for me. Sometimes I'll take a trade based on that. Like right here, we crossed below, we got red. If this was jiggling a little bit, I would have had a sell stop down here because it's back through testing that, but this one just closed up and kept going, so no trade. That's a deviation to what I'm doing here. Trying to see if I could see any other. Yeah, like these right here, I would have definitely been taking that trade, trying to get a scalp in. You know, as soon as you cross below, you start to get the John Wick there. It's deliberating. I'd have had a stop right at the low, and trying to get my 10 ticks. Alright, so let's open up the indicators so I can talk you through that. And again, like I said, this is a markers template. You do not need markers at all to trade this. You can trade it manually as long as you understand the concepts. and what I'm using to trigger the trades, and we'll match all this up, higher time frame, lower time frame here in just a bit. All right, so you don't need in-cat click trader. This is just a manual entry module that I got several years ago, really cheap, and I just keep it on here in case I have manual trades that I'm going to implement. But if you're good with, you can put trades on just as quick as I can on the chart. You know, I practiced after I bought this. I figured I practiced that, and I said, well, I'm just as fast without the in-cat click trader as I am with it. But anyway, I paid for it, so I use it. Order line decorator, that's free. It's in my Discord. It's just a really neat indicator that shows once you get into a trade, you know, it highlights the number of ticks to your take profit, you know, your dollar cost, your dollar amount for your take profits and so forth, and your stop losses. So it's a really neat tool to have from that respect. We already talked about the bar status by Ninzaco. That just highlights where the bar is going to close at. We talked about the swing indicator and constant lines. Now here's why I have constant lines. You don't need this if you don't have a markers template. The constant lines is in this pane only because I'm copying the stochastics indicator with markers. You can see in this indicator template here, there's not a stochastics indicator, but there's a stochastics indicator right here in my pane. That's because I'm using markers to copy this. The %D, %K, and that's what you're seeing here. Well, in markers, there are no threshold levels, so I have to use the constant lines that's in NT8. You know, it's there for everybody to use. And then I just make sure if you're using markers, it's in panel 2 because that's where the copied version of the stochastics indicator is, panel 2 of your chart. So just make sure constant lines is in panel 2. And then up here I have it set for 60 and 40, and you can change these ever how you want to. You know, if you're like, yeah, that's too quick, I'd prefer 70 and 30. Yeah, that's fine. Hey, this is just to help give you some ideas for your own trading. All right, so let's look at the stochastics again. Nothing here, but if you're in markers, it's 14, 28, 3. That's how I have that set, and I'm plotting. You have a choice, so one of my plots is D, so that's the blue line. And then for K, it's the same thing, 14, 28, 3, but here I've selected K. So, and both of those are in panel 2, and that's how it looks with the copied stochastics and the constant lines. Now the arrow up close is simply, and down close is what we've talked about there. This is just the conditions. D is greater, it's greater than 40, so you're going to have one observation out of probably 20 that is wrong, and that's only because I can't program into this when the %D crosses above. If I could somehow code this to where when it crosses above 1, above 60, it equals 1. When it crosses below 40, it's -1. Then I could have a trend component to this. But otherwise, I have to cheat the system. And this is the way I cheat it. I just say as long as %D is above 40, like right here, I'm going to assume it's in a bullish trend. And then I won't, this is just how I have my closes. 2 up closes, and then prior to that, 2 down closes. I know that's confusing, but it's the same thing here. I'm going to assume that as long as %D is below 60 and I have this array of opens versus closes, I'm going to assume I'm in a bear trend. And like I said, 99% of the time that's accurate. It all plays out like that. And then if you have your markers, you always want to, in these arrows, you can code these ever how you want to, but just remember, anytime you select all, if you wanted to see every time this is true with, say, like a dot below each of the bars, this thing it consumes a lot of computational power. I mean, it will really slow your computer down unless you have a new version of the quantum computer out by Google, or the quantum chip, I should say, Willow. Then this thing's gonna consume an enormous amount of power. So I just want. That's why I only have one square to let me know when that occurs. You could put squares over top and underneath, but man, your computer is going to be so slow. It's going to be almost unusable. Try it and see. I have a fairly fast computer, but yeah, it really slows down when I do that. So anyway, this is the settings for that. Fast signal mode is what I use in the entry modules to trigger the automated or semi-automated entries. So this is what is referenced, those variables there, for those of you that haven't used markers very much. Same here, no difference there. Cell down is the fast signal module there. So you'll notice here in markers I have just a naming convention that I use. What I didn't do here is I deviated. I usually put M for markers. Do that. And then following the M, if I just see an indicator name, I know that that's a copied version. That's a copied indicator. If I see a signal, M followed by like an arrow, I know that this is the markers and module up here, markers and I'm creating the conditions for this arrow. Same for the square. I know that this is a markers and template, and I'm creating the conditions for the square to show. So you can see here, this is a simple module. %K is greater than 60 and the close is greater than the open on the current bar. That's the only conditions required to generate the black square, and opposite for the yellow square. %K is less than 40 and close is less than the open. Fast signal K down, fast signal K up, and that's what triggers the entry module for KMobo. Excuse me. Now BC is my naming convention for bar colors. So again, when I see that, I know that it's a markers and template for conditions for bar color up and bar color down. And again, bar color up is simple, close greater than the open, and D is greater than 60. You'll notice what's so simple about this is let's get to since I have a close is less than open, D is less than 40. So as long as D, the blue line, doesn't go above 60, you can see when the bar closes up, it just turns gray. And you get the %K above, little bubble above %D. Now, there's an paint bar entry module, these three here are markers plus entry modules. That's what these three are. 1, 2, 3. Now what you'll notice is, even though I have an entry module, you don't see it up here. I just have this entry module there, but I have it unchecked on visible. I don't really want to use the paint bar entry module, just simply because the paint bar is a trend mode, but I just left the paint bar entry module on there in case anybody wanted to play around with it, but I don't use that. Entry pullback to close, again, you can see here what triggers that are the fast long and short signals, buy up, sell down, and we go back up here to the arrows, which is what this thing is looking for, and you'll see fast signal buy up, fast signal sell down. Okay, so that's what triggers that pullback to close. And you can set these things to ever how you want to. So I have them set monstrously large, just simply because I'll stop my own trading in real accounts. Right now I'm just trading sim in this module. I'll probably trade sim for another week before I put it into an eval. Yeah, there's really nothing else. I don't really like to see the plot up here in the upper left, so I deselect that. I deselect the show panel, and that's leave everything else the same. So I change these settings. Just make sure that if you're using fast signal modes, this is checked, and that'll pop up right there. See, it's gone. Now it's there. Okay, there we go. But you have to manually type these in that matches your entry, what you're using in markers and to get those entry modules. All right, so that's the pullback to close. Now let's look at the entry for the K-Momo. All right, so you'll see here, again, fast signal mode activated, and I've typed in K up and K down. So you just go here to make sure anytime there's a hiccup with an entry module, it's the first thing I check. I've usually mistyped something. It's got to match exactly. Can't be close. It's not horseshoes. It's got to be exact. So it's for K up, that's the fast signal, and then K down, fast signal. Okay, that's it, and everything else is the same here. No difference at all. Okay, so that's the indicator template for this. And again, if you don't have markers, all you need in your template, if you like this module, if you like this concept, I should say, all you need is a stochastic indicator set up like this, and then you can trade it manually. All right, so let's talk about how I use the modules here. See if I can explain it. It'd be a lot better if I could record a session, but yeah, maybe I'll do that sometime. I've tried that before. It was not very successful at the recording thing. So, all right. Well, we have a perfect example here on the higher time frame. So there's two things there's three separate concepts that I'm using to get into trades. The first one is the John Wick on the higher time frame. That is this right here. All right, so price is coming down on the higher time frame. If I'm just focusing on this strategy, now I want you to separate these concepts as I go through this. So I'm just talking about one concept right now. All right, so price is coming down, coming down, coming down. We get to this bar. I'm going to try expanding this a little bit so maybe you can see a little better what I'm talking about. All right, comes down, comes down, comes down. We get to this bar, and we get this big, pullback. This is, the typical 20. We get the typical 20 to 40 handle pullback inside of a trend. That's what I like about this, the settings I have on the black flag, because we know that these pullbacks sometime are just, they're simply designed by the market makers to just completely rip everybody's faces off, get them turned around, and then they go right back in the other direction. So this may not look like much, but this is from the time this bar closed to this pullback here. That was 20 handles. Okay, and this is the minimum I'm looking for, that 20 handle pullback. So look at where now you see where my crosshairs are on the higher time frame. Look at where the crosshairs are on the entry chart, the 18.3. It's right there. Okay? So what I'm doing is, as soon as this thing starts going up, before it even crosses the first fib band on the higher time frame, I'm already up. We get in here, yeah, about right in there. Once I see that it might actually exceed that, I just go ahead and turn the short entry mode on. I set back and just let the K-Momo and the ATM do its thing. And you can see here, these aren't cherry picked. This is just, I'm going to go through a couple just to show you that, it's it just is what it is. You get the entry. I'm looking for 10 ticks on 3, 21 ticks on 2. So yeah, I don't know if I would have looks like I would have gotten everything on that one right there. But anyway, it's a profitable trade. You can trade this ever how you want to. Don't follow my ATM. Get your own. Basically, I've mentioned this time and time again. I suck at this kind of trading. I just keep sucking less and less and less. But I still suck at it. So I'm trying to get my intraday NASDAQ trading on par with my crypto and options trading. I don't know how long that's going to take, but anyway, this is really helping me out here. So anyway, that's an entry there. So let's go back and find another one. This was a until you cross that threshold, this one didn't quite cross, and you would have probably gotten some gnarly potential fake outs on this one right here. So that's why I like to wait till it crosses the threshold. Now, if you see the John Wick there, and you're like, okay, it didn't cross the threshold, the other option you can do is, let's move to another concept now, is, hey, I want to take the first pullback. So bars turn red, it looks like it's going back down in the direction of the trend. So then you get in right here. Either use the two close method, which is what I would do in a trend pullback, two close down, and then you get your trade on. So that's a good example there of how I use this. Here's another beautiful example. I'm not going to expand this out. Let me do this though. How many right side margin? Wow. Okay. Let's close that up a little bit. Yeah, it's much better. All right, so look at this. Crosses the threshold. Now, you would have gotten 2 entries on this. You see where, look at where my cursor is, the horizontal cursor on the entry chart. Okay, that first threshold cross there is right here. It's this port right here. All right, so you get right up there. I would have had the short on. I would have flipped the short on once we got up in there. The tip off for me is when this, in the bearish trends, when this turns blue. that's the tip off for me to go ahead and activate the short module, because it's more than likely up there close to that threshold. So activate it, and hey, I get my 10. I don't know if I'd have gotten 21 out of that, but I would have gotten 10 and probably break even. 10 on 3, break even on 2 is probably what I'd gotten there. But we're not done. It immediately reverses, goes higher. Now look at where my cursor is on the higher time frame. We're in the this area here is where I really like, in between that first and the second. And then usually these are really clean trades right there. And bam, you got your it's coming back up. As soon as I see that black dot, that sets me up for a potential second trade in the direction. We activate it, we get in, that's a clean one there. Would have gotten everything on that trade. All right, so that's an important feature if you're trying to get 2 trades. Something to look for. What I've discovered is the first run up, we get to that, we start to get close to that first threshold. These bars are going to turn blue every time in a bearish higher time frame. And then, we just go ahead and activate our thing and we get in. All right. It's not finished. It's still waffling. It goes a deeper pullback, which I love. I love the second ones. They're usually really, really clean and easy and work out really well, because now market makers are just really jacking everybody around. They want to take it lower, but there's too much money in ripping everybody off, on these pushes up like this. So we wait, we just activate the short, and bam, we get back in. Percent K crosses over, it crosses over here, and we get our shekels for the day. Let's see if we can find same thing here. Let's see how many entries we would have gotten on this one. I'm trying to... No, this one was pretty clean, so this is how... this move up here, this is where I would have had my short set, because we're approaching that first fib level on the black flag, and then we come down and we miss. You can see here percent K doesn't get close. We still got the short activated. Now we get into where I really like the short trades, between that second between the first and second fib level. We have our short activated, and bam, there we go. All right, now if you miss it, and this is important, you've got the first pullback in the downtrend. Use two close entry method on the short side, to get you back in. So then, let's say you miss this, dang, but you happen to see it, you recognize, okay, it's resetting, it's potentially going to go back. So now just go ahead and activate your short up here for your 2 close entry. All right, let's summarize again the things that we look for. We know in a bearish down move, when it comes back up, pops back up, as soon as it shows its head and starts approaching that first one, we go ahead and we activate our K-Momo short. The bars are blue, that's what we're looking for. We come back down. It didn't trigger, and look what we got. We got the second black square. That's what we really want, because now the market makers are going to push this a little bit higher, try to fake everybody out. That's what we want. This second leg right here can vary, by length, depending on how much of a pullback they take this thing. But we just go up here, and we've already got our short activated there. Bam, we've got that. If you miss it, we get red. Now we're looking for the B4 jiggle pullback. The first one, we don't want to take multiples. I mean, you can, but honestly, you're rolling the dice after the second one, I think, on most of these. All right, so that's how I use that. So let's see if we can find a bullish example. Oh yeah, here's one. Okay, this is probably going to be a pretty good one here. So see if I can get my entry chart where I want it. No, this was an easy one here. Real easy. It was a straight push down, a flush to the downside. We got red right in here. As soon as it started turning red, this is where I would have entered the K-Momo long. We come down, we just blast through everything. There's no jiggling at all in this thing. Blast straight down. It goes between the second and the third fib level, reverses, and that's a clean trade to get your scalp in. That's an easy one there. Okay, here we got a couple. All right. Again, uptrend. Oh yeah, multiple. Let's do this first one here. So we got the defined uptrend. We come back. We are, by now you should be able to see the common characteristics and how this sets up. We're in an uptrend. We start pulling back. We approach the first fib level and we start to turn red. Okay, it's like this every single time. I mean, it's every single time. It's not a deviation. There's nothing that it's just pure math. That's all this is. And it's very exact. So what's very exact is the initial setup. Now, sometimes the execution is not clean because after this, they can just go all over the place with price. But the setup is very, very clean. So right now we're clipping our long and just saying, hey, send it to me. Let's see what we can do. And bam, we get that move right there. So that was a clean one. We would have gotten everything we wanted on that, the 10 and the 21. Okay, but hey, check out. You missed that. You're like, dang, I was drinking my energy drink. See what I missed? I missed that. So let's see if we can catch the first B4 jiggle. So then we go in here. All you're doing is just waiting. You get the higher low, two down closes prior to the 2 up closes, and bam, you get your juice for the day. Here's one that just barely hits the first line there. So again, what do you see? You see the big old uptrend coming up, coming up, coming up. Here's the pullback. Hey, we get right down into the first line. Look what happens. It's the same thing every time. I mean, every time. You get the yellow dot on, this is for bullish pullbacks. Yellow dot, red bars, activate the long, set back, take a sip of coffee, energy drink, bam, there it goes. You would have gotten your, I think I would have, depending on how fast these entries are on a market order, I'll say I would have gotten my 10 ticks on 3 and probably a break even on 2 for this one right here. If it went fast. If we went slow and I got a good entry, chances are I'd have gotten everything on that one. But, you missed it. This one was a little bit iffy only because of when the D crossed above 60. But you're in a defined uptrend. You could have still taken this B4 jiggle right here, the 2 up closes. Because if you're watching your D down here, the D closes on the down bar. So it's not going to paint the bar blue, but it is a valid bullish signal. And you've got the pullback underneath the D while it's above 60. So you're clear to take that first entry after your K-Momo entry. So I hope you're seeing a pattern here. K-Momo entry, and then you got another chance at the first pullback once this resolves on either one, bullish or bearish. All right, we'll do one more of these. on the bullish side. Let me see if I can find when it really penetrates. Oh, that was a nice one there. Probably multiple, yeah, there's multiple opportunities there. Again, look at this, guys and gals. See where my crosshairs are. Look at that. You would have gotten on this bearish trade right here. This is where you would have activated, oh dang it, activated your short. You would have gotten that. You definitely would. I would have only gotten 10 ticks on 3. I would have broken even on 2. But it goes back up again. Here they are, second push up where they're making it hurt. You know, we know the play. Our black flag tells us that this is still in a bearish until it until it closes above this trail. Till it closes above that, it's just market makers. They're just jacking everybody around. That's all it is. So they make that second push up. Bam! There you go. Easy one. Uh-oh, I missed it. Now what are you waiting for? You're waiting for the first B4 jiggle to take after that. Okay, it's that simple. This pattern just continues to repeat time and time and time again. So the other day, this is what I was doing. I was noticing the patterns, and I traded this thing from like 1 o'clock in the morning, all day long, just to get saturated with how the mechanics form. So don't just necessarily look at the setups. You can initially, but you're going to notice patterns amongst the patterns. And that's when I noticed that when these work out, first push, sometimes you get that, and then you get a B4 jiggle, that trend continuation. Sometimes we get push up, we get the good K-Momo trade, and then it reverses. They jack everybody around. They go up to the second or sometimes third level. This one went almost to the trail, and we get another entry. And then guess what? You get the B4 jiggle entry. Yeah, here's some good ones. Let's take a look at this. Bullish trend, pull back. Look at the pattern, same pattern again. Get the yellow dot, bars turn red. What are we going to do as we approach? Yeah, just go up here and flip this thing long. You're getting ready for a long entry. If you're trading manually, let me start interjecting that now. If you're trading manually, you're just looking at this crossover right here. So if it crosses over, you can try to buy the bid, buy the market. I don't like buying markets, even though that's what I use in the markers. But buying markets after an indicator crosses can lead you down a bad path. So I tend, if I'm trading manually, I'm looking at this, I try to get in on buying the bid or selling the ask, if that's what I'm doing. But anyway, back to our pattern. Same thing, we turn it long, we get the trade, we're good, okay? And here we go. This one just doesn't give you a second entry until right here. So you get get the pullback. If you miss that, then what you have here is you get in, and I would have gotten 10 ticks on 3 and missed and broke even on 2 on that right there. But that B4 jiggle wasn't anything to write home about, but on a scalper's, you probably would have gotten your 10. I talked about this earlier. This is another entry on that same. We broke that swing high, and what do we do? John Wick. I'm tempted to take those. If I haven't taken a trade yet, if I miss this, and I hit one of these levels and I get a John Wick, that's very, very normal to get that wiggle prior to breaking that swing high right there. So anyway, a couple of things here. One more of these, because let's see how that worked. This is a good one too. So anyway, bull trend. We come back. Look at the same pattern. red bars, yellow dot, activate your long, get ready, bam, there's the signal, and it's an easy trade. You don't get a B4 jiggle here. It immediately goes back to red. So yeah, so now that's telling you there's probably going to be some chop. You know, if the trend doesn't change and you start getting red in here, yeah, that's the third entry there. Forget what I just said. That's the third entry. So you got another shot right here. That's actually another good one. Yeah, this is really good. Let's see. Yeah, you don't get the it doesn't break. What you can't see is where this John Wick breaks right there. It doesn't really break until, you know, right in here. So you would activate your long. It wiggles around a little bit and finally crosses that threshold right there, and then you get your entry here. And that would have been an easy one. I would have gotten everything on that one, 10 and 21. All right, so hopefully you see how the John Wick concept works. It's really powerful, and you know, if you just focus on that, yeah, you'd be okay. I'm running I move my stop loss down to 31 or 41 ticks. I can't remember what it was. $41. Okay, so starting with 5, 10 tick profit on 40 on 3, and 21 tick profit on 2, and then at 10 ticks of profit I go to break even plus 1. All right, let's okay now. So the John Wick is really, there's one primary concept in there, and that's the John Wick K-Momo trade. The second concept embedded in the John Wick trade is the first B4 jiggle pullback in the direction of the trend. We highlighted those. So that's 2 of the 3 methods that I've been using with this strategy. The third method is something I started looking at, and I just said, you know what, this is really, really interesting here. Here is a loser. You won't see this very many times, a push down, a trigger of the trail, and then a move back up. But what I noticed, what I've been doing is just, if you can imagine, see if I can illustrate this on, let me find this. It's not going to let me do it with the market closed. All right, so in this, yeah, it's not going to let me do it. Dang it. All right, I'm going to illustrate this with some lines here. All right, if I was on this bar here and I am activating the short, just waiting for this to play out. One of the things I noticed was when you get to these bars, these are all easy. Okay, I'm just trying to show you the concept here, but it's during the trend change, it's where you might get washed out of a trade. So what I started doing was, or you won't get activated at all. So let's say I'm on this bar here and you see the trail. This is actually where the Ninja bar status would, when it closes above this, the trend has changed and it's going up again. All right, so what I'll do is I've got KMOMO activated for the short side. Now I get triggered in here and we're good, but I go ahead and put a buy stop in above where that bar would close if it goes bullish. If it turns around and goes bullish and closes, so now I'm in long on this bar close. So that's an advanced concept, and I know I'm probably going to confuse everybody unless you see me do it in real time. So I never had a losing trade. I think I did those 5, 6, 7 times. I can't remember. But what I started noticing was, hey, when this thing flips, yeah, it typically flips, and I'm not going to say it's an easy 10, but because this thing can backfill quite a bit through here before you get to your 10 ticks. The majority of the time, it goes 10 ticks really quick. But there was one case where it went 9 ticks and then came all the way back. I mean, this is a big stop. If you put your stop back, if you get in on this close, and on 5 contracts, you've got like $1,900 in risk right there. So this might be a good strategy for somebody trading one contract. Try this. This is really simple. A no-brainer is just try to scalp those trend changes. Take a look at that on your chart and just see how all of those work. This one right here you would have lost, but I mean all of those trend changes minus that one, yeah, you probably would have gotten soaked on that one. Yeah, there's like between 1 and 3 a day, and I'm talking a 24-hour period where you get this right here. So we've only seen one, two, three. Yeah, there were 3 that 24-hour period, the entire time. Only 3 that didn't work out of all those. I mean, if you're looking for high probability and easy strategy, it's just buy those trend changes, sell the trend changes. And if you're scalping, if you're doing one contract and you're trying to get 10 points, hey, this looks like the easiest thing to do. You got to set your stop. I did it with one contract just to see. I mean, you've got like a $450 stop loss, but if you're trying to pull 50 ticks off of this, that's from a high percentage trade like this right here. Not too shabby, I think. So anyway, take a look at that. It's just how I'm using that. So, okay, let me summarize. This video is long, but I think it was worth spending a little bit of time because it's just, there's the patterns in this thing are really neat. 3 concepts. Concept 1 is the John Wick and the KMOMO entry. We we discussed the pattern that leads up to the K-Momo entry. It's the same every single time. It's worth going back to that version when we talk about that pattern. And that pattern is something that you can hang your hat on. The pattern inside the pattern is the first pullback after the K-Momo hits. So you get the John Wick, you get the K-Momo, and then a lot of times you get the first before jiggle pullback. So sometimes you can get 2 or 3. I've gotten 3 pullbacks out of one of these John Wicks here. I've gotten 3 pullbacks on some of these without any trouble. Those are rare. You used to get 1. A good percentage of the time you'll get 2. A small percentage of the time you'll get 3 opportunities. But then you can look for that continuation pattern to B4 jiggle in the direction of the trend. Bearish and bullish. Yeah, all those B4 jiggles right there. Let's see. No jiggle there, just 1. Anyway, so that's the concept, the 2 concepts there. And the third one is, of course, just the buying the trend changes on the 75.2, selling the trend changes on the 75.2, trying to get your scalps there, or trading less contracts and going for larger targets, because there you can control your risk a lot more. So anyway, that's hopefully this video helps you with this strategy. It's a very simple concept, but it's been pretty powerful, for the few days I've traded it this week. Very, very powerful. So if you just wait for those, don't press the issue. That's where you get your trades from. Okay, there's plenty of trades inside of this. If you wanted, you can still use that. But in context, if you're trying to wait for a pattern inside of a pattern, that's it. I mean, that is it right there. I mean, this is, where is that? That's a beautiful, here's a good one that really takes a while to play out. I wouldn't have been stopped out here. My stop would have been, up in here with this thing. So we would have bars. You get the black square, blue bars, and we're looking at this. See the crosshairs over here where the first John Wick after the trend change. We get down, we're short, activate the short, we get short there when it crosses, and then it jiggles a little bit, comes back down. Okay, now if you miss that, now we've got red, we get the B4 jiggle. There's your other entry. It's just, this is a compact version. So we would have gotten our points here, our 10, and probably, yeah, we would have gotten the full thing there, because we rode through that pullback and we got 10.21. But if you miss that, then you got the B4 jiggle right after that. So now you recognize the pattern inside the pattern. John Wick, K-Momo entry, and then look for the first B4 jiggle after that setup. It's really powerful. If you can force yourself to wait for that, maybe that makes a difference in your bottom line over 1,000 trades. So and that's what you're really looking for. Surviving so that you can, get to 1,000 trades. First 1,000 may look ugly, but if you get there and you hadn't flushed anything out, man, you're a winner. So anyway, hopefully this video helps you, and good luck in your trading. We'll chat with you later.